the format was that there will be more of a discussion and interaction so that people could voice their difficulties, constraints, doubts, clarifications. So that is the why we kept this discussion group for 3 weeks. So now we are going from one phase, one topic to another. Let me summarize quickly before I invite Srinivas to make a short presentation, and then I will continue. I don't want to delay further, because if I delay more, then we have to extend the session, which I don't want. So I want to stick to that maximum 2 hours. Srini, while you hold on, okay, so the introduction, as way of introduction, let me say this. So basically, my idea is like this plan, rather. So we will have a total of, sorry, somebody should, yeah, Srijit, thank you very much. Please mute your videos, and I've not muted them, but please. Okay, going on. So I have, the basic plan is to have 3 batches of strategy. What is a batch of strategy? One batch contains two strategies, one for trend trading and the other for range and breakout trading. Similarly, batch 2 will have different trend strategy and a different breakout, different range and breakout strategy. Similarly, the third batch also. So everyone, I expect that they will own up, explore, practice, learn, master over a period of time. It won't come in one day, over a period of time. And these strategies, definitely I've seen people employing them. They make a living out of it. That means they are whole-time traders, and they run their families, they run everything, they get wealthy, just owning 2 strategies which they master. So that is the most important thing. When I say master, it's a much different level, which I will explain to you. So now, coming where we are now, we did the Renko strategy to a certain extent, but some people have caught up, some people are still learning, but definitely it will take more time. You can't do it in 1 month. So because for that, you need some other ideas also, because just focusing only on the ideas related to strategy won't help. You have to have a well-rounded perspective of other things that are related, so that you are able to handle different market situations. So similarly, now that we have done one direction strategy, in the first batch, we are now going to do the range and breakout strategy. So we did Renko. Now the presentation is going to be on Bollinger bands, which is basically a range bound strategy. So before I start, and I'm added something differently, the focus is more on execution, not on theory. And then we have already done something on Bollinger bands. People are familiar, but I will try to give how practically day-to-day basis you can take a trade, and what you need to know to take the trade. So this is what I'm going to say. So before that, I go to my presentation. I will invite Srini, who has been trading on Bollinger bands. And I called him. I wanted him to focus on his issues, because I've seen Srini sometimes, some days, he makes a very good, returns, does very well. And sometimes he is not consistent. So that's why I invited Srini to share his experience for a few minutes, short time. After that, we can go on to my presentation. Okay, Srini, the floor is all yours. You can share your screen and you can speak. Thank you.
Sure, sir. Okay, let me share my screen. Yeah. Please let me know if it's visible. Yeah, I think it's visible now, right?
Yeah, it is visible. I will give you a response for volume, visibility, everything.
Okay, sir. Thanks. So I use two charts. So one is I use Renko. The other one is I use Bollinger Bands. So I face difficulties whenever the market is in sideways. So earlier, right, when I started, I blindly used to follow only the Bollinger Band strategy. So in Bollinger Band strategy, what I do is I just take trades whenever it hits the 3SD, and it also gives me a reversal fractal or when the KDJ turns red. So I used to do like that, but now after I learned Renko, and since I'm using both, so what happens is I get caught whenever market is in range bound situations. So yeah, that is one thing. And one more thing is I also face difficulties since I do options, so I don't do futures. So I face difficulties in sometimes I face difficulties in keeping the stop loss and trailing the trend. Sometimes I book the profits half the way. So those are the difficulties I face. For example, so can we speak about the stop losses also, sir? Stop losses and trailing stop.
Anything,
Yeah.
anything, whatever you wish, Srini.
Okay, sir. Yeah. So what happens is, let me take this day as an example, which is 1st July. So earlier the morning trend was completely down, and after that we had a reversal. So here I entered long trade, but what happened was I had to re-enter because I was in options. So as per our Renko, right? So what we do is whenever we see a
Sir, if you don't mind, we are not seeing your screen actually.
oh, okay, sorry, just let me share it again. Sir, do you want me to start a video, or screen sharing is enough?
You share whatever you want to do. When I do my presentation, I will take up.
Okay, sir. Yeah, is my screen visible, guys?
It is visible.
Okay. Yeah. So I follow these two charts. So one is Renko. So that is for clearly that is for identifying the trend, and the other one is for Bollinger. So initially I was only following Bollinger where I was doing good in sideways market, but I had problems in breakouts. And then I also adapted Renko charts. So where you will be able to capture a long trend. So the problem I face is, for example, here, right, at 9:24 on 1st July. So we enter long whenever we see a reversal break and whenever we see the indicators, the confluence of indicators giving us signal. So if you see here, right, on at 9:50, 9:58 or something, so it gave us a long signal. So I went long, and I used to do options, and options I used to keep 25 points as stop loss. So what I did is I bought it as I bought a call at say around 350. It hit my 25 point stop loss. It went further down, and then again it reversed, and I had to re-enter. And after that, I was able to capture some trend. But Friday it was a very slow day. The momentum was not there, so I exited earlier because I what I used to keep as trailing stop losses. So I opened the option chart, and I will keep the every 5-minute low of that particular strike as trailing stop loss. I may be wrong, but that is what I currently follow. So what happens is whenever there is a trend, whenever there is not much momentum, so obviously you will see some retracements, right? So that is when I get my trailing stop losses hit in such days actually. And yeah, and of course sometimes you will see pullbacks, right? In Renko, if you see it has hit the 2 SD here, and you see reversal bricks, and you can think that that could be a reversal, but it is actually a pullback. It is just it is just retracing and then just going high and high. So in that times also I face some difficulties, like I face difficulties to identify the actual reversal or whether it is just a pullback. So that is another thing though. But the problem but one advantage of our setup is whenever we gain, right, we gain as per Renko, we gain at least say 100 points, and our stop loss is just 25 points. So even though I went wrong here, I was still in profits because I captured quite a good premium. So that is going well, but I wanted to I wanted my win percentage to be higher. So I feel that if I'm able to identify these pullbacks or whether it's a reversal, and then keeping stop losses and trailing stop losses, those things, if I can improve, sir, I think it will be even better for me. That is one thing. And the other thing is for the range markets. So this Renko, right, if you see here, full of range, and you see reversal, but no much momentum here and even here. So in these kind of trades, right, so in these kind of time, it will be difficult for us only if you follow Renko, because there will not be much momentum. We'll be stuck there. So we should also be able to identify if it is a range bound market. We should be quickly able to adapt, say, a Bollinger Band or some other strategy which sir is going to explain now. Maybe we should be able to identify such kind of markets and play accordingly. So Renkos are mainly meant for or momentum, right? I mean, to get the trend, capture the trend quickly. So yeah, these are the difficulties I face.
Okay, thank you. Have you finished?
Yes, sir. These are my main points: stop loss, trailing stop loss, and these things. Yeah.
Okay, very good. Let me give you my comments before we go to the presentation. First, there is a question from Rakesh Chowdhury. It's about the first thing I said before we start about the new people, how to catch up with so much that has gone down the line. And he is suggesting an induction kind of program for the onboarding. I do not know how many are there like that. Maybe 30, 40 people, I am not sure. We can do an induction, but the issue is where to start, where to end, because so much has gone. So I will think about it, definitely. If you want, we can have 2 hours like this. Sorry, please mute yourself. Wait, please. So if one person at a time, so please organize yourself. You can ask questions. Yes. Do you want to make any comment on what I said now, or it was just a unmuting issue? Okay, so we can do a induction. Basically, we can just try to catch up what has gone. But one suggestion I will give you: the best thing is you go to the YouTube channel, try to go through the past meetings. The difference is these meetings are long, I understand, 2 hours, but we are doing it only once a week, and a lot of subjects are covered, and we still need members to catch up. So you have to somehow find the time to go through it. Plus, my induction will also help you. So both these things combined only can really make the newcomers to come on board fully. And the more you delay, it will be very difficult to catch up. Because even, for example, today, the concepts that I'm introducing will be completely new. And so that's my advice. Now, going to 2 of Srinivas' issues, my response is like this. One, we are momentum traders. It is on the stop loss issue. Of course, we'll explain how to do the stop loss. There will be a separate session on that. Each strategy has a different idea of how to make stop loss. Some people do it on the levels based on days high, days low. Some people do it based on swings, swing high and swing low. Some people do it on support levels and resistance level. Some people do it on Fibonacci numbers based on Fibonacci level. Some people use the pivot points. Some others do on the previous candle low and previous candle high, that kind of concept. And other, people on Bollinger bands, they use fractals. So it all depends on the strategy. It is not one size fits all. So based on the premise on which you enter, the stop loss will be dictated. I said already, but let me repeat quickly. The concept of stop loss is like this. You enter based on certain view, right? Certain assumption, certain premise that this is, for example, you think this 33,000 is a very strong support level and I'm going to enter. It has already hit twice. So it is very unlikely, it's only retesting. So it is going to bounce back. So you enter the trade on that assumption. Unfortunately for you, after getting 2 times support and bouncing back, the third time it goes down. It doesn't respect that support. In spite of that, it goes down for so many reasons. Now what happens? Your assumption has gone wrong, right? Your view has gone wrong. The market is gone behaving opposite to your original view or assumption. So it has gone down. So what in theory happens is your basic assumption view has been invalidated. So when your basic assumption invalidated, you should exit. So if you want to exit, how do you do? By making a stop loss, right? So that is the concept of stop loss. Whenever your initial assumption of making an entry gets invalidated, then you should exit because there's no point in staying there in the trade because your original view is invalidated. So that is the where your stop loss should be. So this is the basic concept. But in practice, we will discuss for each strategy what are the various methods, and then it depends on your risk-taking ability. It depends on the kind of risk-reward ratio you want to take. So stop loss is basically risk, right? So it is associated with the reward also. So how long, what is your profile, what is your risk-taking ability? So it depends on all these things. But however, this fixed rule, it's not written on concrete. All these things are flexible, which I'm going to explain. Now, the second thing Srini raised is how to distinguish between a pullback and a reversal, right?
Yes.
Retracement and a reversal. This is the big question. Most people do not understand. For example, he showed the Renko where it was just a pullback, hit the stop loss and then went back. So first question, the answer is we are momentum traders. If you take a trade when there is no momentum, then of course it will hit the stop loss. So it is better to avoid any trade without momentum. It doesn't make any sense at all. We are only doing either scalping or swing trading. So for us, we need momentum. If there's no momentum, there is no trade. You have to wait, you have to be patient. Maybe you will get only 2 trades per day or 1 trade a day. That means there's no trade for you. Just for the sake of entering, then saying that anyway I'm keeping 25 stop loss, it will only hit stop loss because there is no momentum. So we are going to talk about all these things now in our presentation, right? So let me go on now. Just give me Srini, you stop sharing your share. Let me do that, okay? So let me go to my, where is that? Okay, share screen. Okay, I'm going to start this. Srini, you have to give me that. Is it clear? My screen is visible. My audio is audible. Can you confirm?
Yes, sir. Both are clear.
Both are clear. Okay, let us start now with this. It's already about 20 minutes we have spent on this. I wanted Srini to explain the difficulty so that my presentation may answer some of his questions and other questions. Unmute, please. Mute, please. Otherwise, I'll just remove you from the meeting. Who is this? One moment. This is. So look, if it is muting, I have to go through everything.
I have muted
I have
him, sir.
to find out who is doing it. Then it becomes very complicated for me to do the recording. Please respect, please mute yourself. I'm saying again and again. Otherwise, the recording will, editing will become very cumbersome for me because I need to remove those things. So next time, if anybody is not muting himself, I will just drop that person from these sessions, right? Because it becomes a problem. It happened last time also. Okay, go ahead. Now, first is the idea. There are three ideas I'm combining in this presentation. One is on the trade execution, which is on the trade quality and execution. Srinivas, can you find out who is the unmuting? Can you remove that person, please?
Yes, sir. I have muted him already. Yeah, he's not unmuted. Sir.
No, who is this person? Next time, please just remove him.
Sure,
If it is not, there's no second chance. It really becomes very difficult for me to do the editing for the recording later, please.
Sure,
Okay.
sir. I will do it.
Yeah. Okay, go ahead. Thank you very much. So we are going to concentrate first, focus from now on the trade execution, what it needs to do a better trade. So I'm going to talk about what is the concept of trade quality, right? First. So what is high quality trades? That's what we are doing. So the fundamental mindset change is you should not look at trading as taking right trades or wrong trades. That's what we all do, right? We are thinking, oh, I took the right trade or wrong trade. No. You should look at trading as taking high quality trades versus low quality trades. So that is how it makes. Why, which I will explain. Actually, as like Srinivasan said, he got out with 25 points stop loss. It's a wrong trade. That's still fine. Another case, he said, in spite of this, he got some 100 points or so. So as long as you cut your losses short, you are fine. But what is important is take your profits long. This has been proved statistically by many people. There are a lot of articles, books on this concept that run your profit high, cut your losses short. This should be very, very fundamental in your mind. So when you say high quality trades, then what we mean? Why to focus on high quality trades? The higher the quality of your trade will result in higher probability of trades going on your side. So this is clear, right? The more the quality of the trade, then I'm not talking about the right trade or the wrong trade, but the quality of good quality and a bad quality trade. The trade will go with true momentum. So what happens when you take a high quality trade? That means it will go with momentum and direction, which is what we are going to talk about. So your returns will be much higher for each trade. So this fits into our strategy of running profits long, right? How to stay on the trade. So what you need to do that you have to make sure that every entry is a high quality entry, not just entering for the sake of entering, not because you are impatient or, and you can't wait. If the market is like that, it will be like that. So we have to go with that. Okay. So now, before just I will go to, you already know that, I will go in 2 minutes. One is on what are the trend stages. So the first picture image, early trend, mature trend, and late trend, then consolidation. We see this every day, right? So the first lesson here is the entering trades during a trend early stage can maximize profits. So many of us, we think we do not decide immediately, we are unsure, we lack conviction. Then, for example, in Renko, we take in the middle. See, what is the idea when we talk about Renko? We want to take maximum, suppose the bricks is moving 8 bricks. We want to take at least maximum 7 bricks, 6 bricks of the trade. That is our objective. We don't want to exit and third and get it out at fifth with 50 points, 100 points. There is no point except that you are facing a risk. So, in essence, what does it mean? That we are trying to, there is a move. We are trying to capture maximum points. There is also a risk. So, we are going to balance, that's what we talk it as risk management and money management. We'll talk about separate topic there. I will also post some videos on risk management. I've not done it so. So the question is, how to early entry is important. As you can see, once you enter a trade, late, mature trend, the figure is explaining the image. So then definitely it will enter whichever, whether it's a bullish trend or a bearish trend, it must enter into a consolidation phase. Squeeze, we know in Bollinger Band. Then again, there will be a breakout, right? So in a trend, it is important that you enter early. How to enter early, that we are going to talk. Then there is a figure about resistance and support, which you all know. The second, third image is also that. So now we are going to this consolidate. Okay, there is a picture on the consolidation phase, which is what we know. When we come to Bollinger Bands, we'll explain. The first picture is on the, again on the resistance. Basically, there are swing highs. So higher high, then higher low. So this will help you to spot the trends, right? So we are talking about what consolidation occurs after trend when price moves sideways between support and resistance. Some people, most of people know all these things, but I'm just, for the record, I'm saying this. Consolidation ends when the price breaks through the support of resistance. Consolidation occurs due to trades, closing, trading, and taking profits. Okay, we all know that. So now let's go to quickly to the next one. Okay, sorry. Then the thing is how to take high quality trades. Okay, right? We now know what is more important is not right trade or wrong trade, whether you took it a high quality or a low quality trades, how to take them. Let's see some concepts, whether, you are familiar, but whether you are familiar enough, deep enough, you have an understanding is the point we are going to discuss. Let's take this topic of support and resistance. So what we do, support and resistance, we take it from Camarilla or we take it from some other trend indicator, or we draw our own line from the previous day, highs and lows, and then we support line. Then we take that line as if it is written on stone. Then we take trade based on the support line and resistance. So we keep that in mind. It is hitting support, most likely it is going to bounce back, or one resistance, right? So when we do this, most of the strategists teach only that, whether CPR or other level-based traders, they will do that. But really, what is a support and resistance? How a support becomes really a support? Okay, so that is what is explained. A support, there must be, okay, a good support or resistance means what? What are the components? Multiple reactions, bounces and reversal. So it is going on hitting many reactions, minimum 3. See, if you have minimum 3 hits, then only you can draw a trend line or a support line. Otherwise, it is not a support line. Okay, so that is basically, people say 3. Some people want 4, some people are prepared with 2, but more reactions in terms of hitting the bounces and reversal on any line, horizontal line, that makes a good support and resistance quality, right? When you enter or take entry. Now, the second is the support and resistance which are recently formed. They have value. Because yesterday's support and resistance, the market might have completely changed the nature of the market based on news flow, based on so many factors. Every day it is different. So the recently formed support and resistance levels have a higher value in terms of our understanding of the support and resistance. Third, I'm sure you know this also. When you draw support lines, we go to the higher time frames. It has more value. For example, if you're trading on a 3-minute chart, you should go to the 15-minute chart or 1-hour chart, take the support and resistance level, then come back to your 3 minutes or 1 minute or 5 minutes and trade. Because the longer the time frame, that is where your good support and resistance levels can be drawn because it has gone over a longer time period. So the chart is clear. And then, so when you draw a support line, do not go and let's say, okay, I'm trading in 3 minutes. So based on the 3 minutes high as a low, I'm going to draw my support line and I'm going to trade on the support line. They're very flimsy. They won't stand because the first way to go is to the higher time frame, mark the levels, and then come back to lower time frame, and you'll see that those are has more probability of holding the support and resistance. Now, okay, extreme swings and high and lows, particularly when there is a sudden what you call trend or momentum, extreme situation, like 250, 53, 50K candles, or in Nifty 125 candles, many form, and then suddenly or a news flow. Many people, when this RBI policy came, then every time it happens the same. There is a sudden upward or lower trend, then immediately it reverses. People who are late, they lose a lot of money. People, these are done by operators also, right? There are many operators and bigger players of FII, DIIs. So they make with huge volumes. So you do get like your power candle or what you say, algo candles and all that. So those highs and lows have definitely a higher credibility because that is the extreme. When all the buyers come and when all the sellers come, that means there's maximum volume. At that volume, what is the highs and lows are formed. Okay, so this is a general idea what really makes a support and resistance. It is not that. There is more which we are going to talk about it. So quickly, what kind of expertise you need really? So if you think you are struggling, yes, I'm doing everything possible. Still, it is again same problem. One day I'm doing better, one day I'm doing well. That means, thing is, you check this. I'm going to tell you just pointers. I'm not going to tell you, this session is not about very detailed explanation on anything. It's an introduction to get you, bring your awareness to tell you that these are the things you need to do, or these are the things that makes a good trader. So after this, we'll take on. We will go topic by topic in the coming session. So there is a overall framework, and then we are going to do. Let's look at some of the points I noted. What kind of expertise you need? Okay. Now you can check. You can make it in a list. You can put, I know 50%, 20%, or I know 100%. Everything is fine. Okay. What is area of, I'm taking at random. What is area of confluence? This area of confluence is not the confluence we are talking about with indicators. This is a different idea. Okay. So what is the area of confluence? Now let's look at a support level, holding and bouncing back strongly, right? So now what exactly is happening? You are also entering, you are also successfully entering, and it bounces back and everything happens and the support is holding or resistance is holding. Now, how this support is formed? There are different type of traders. Okay, we know there are CPR traders. They are traders based on chart patterns only. They are trading. There are traders who are trading on the basis of open interest, right? There are traders who are basing on support resistance level. There are traders on Fibonacci. Then you have Greeks, right? Based on the Greeks, they take trades. So you have, I can go on. There are many different ways. There are people who are taking based on moving averages, right? So, and based on volume, we have done that, based on volatility indicators. So all kinds of people, they take trades. But at that point, the combined effort of many people, different types, styles of traders join together, and that creates, everybody thinks that this is the point. This is the confluence. This is the point where this bank Nifty is going to hold at this level and it cannot go, and it's a good level to buy, it is cheap and it's going to bounce back. So when different styles, different people think with their emotions, they feel confident, right? And that those emotions are drawn and aligned. So these are not just lines, these are emotions and thinking and expectations of so many diverse people of things. So if you are able to identify this area of confidence, if you are able to join the group, right? So definitely you will have a high quality trade. So that is what it is. When you take a trade, this area of confluence is important. So how to find, we will discuss. I'm just trying to see. Now, what are the, so you have to have an idea about this area of confluence, not the confluence which we are talking about with indicators. You should be able to draw trend lines, right? So trend, as you know, higher high, higher low, that's one trend, lower high, lower low. And what point, how to connect it, not just drawing a line will become a trend line, which should I draw the line above the wick or above the body? Should I consider wick or not? Or just draw on the base of, and which 2 points I should draw the trend line? A trend line, minimum, you need 3 points, right? So you just don't connect 2 points and say this is a trend line. You'll be completely mistaken. So practice for drawing trend, very easy. In trading view, it is very easy to draw. Try to draw just 3 hours of practice is enough. You should be able to draw, and there are different type of trend line. Moving averages. Now, different moving averages have different value and different strategy. Alligator, we are using different set of moving averages. In GMMI, we are using 10 moving averages, 5 short and 5 long, right? Then we use 20 moving average also, right? SMA, right? In Bollinger bands. we use, we use 21 EMA for moving. And what is the difference between EMA and SMA? You just don't take it for granted. You have to know when to use, why Bollinger band is using SMA, not EMA, right? What is it? Why 21 becomes an important moving average? Or when to use 50? Or what is the moving average crossover? What does it really mean? And how there is a trade strategy, which is a very good trade strategy, which is based on 3 moving averages. So I will post that in YouTube, or we will take it up a session. Just trading on moving averages alone, it is possible to trade and make a very successful thing. So use of moving averages, when does it work? When does it not work? Is it a leading indicator, lagging indicator, right? So these kind of things one should know. That's about it. Okay, then comes to, I'm just taking order, not in the regular sequence. Divergence. Divergence is a very important concept, you should know. Why? Because we are reversal trade. Now we are talking about Bollinger bands. So that is the topic for today, range trading. So range trading is associated with 2 things. One is reversals, number 2 is breakout. Okay, these are the 2 ideas. Now, when will a reversal come? What is the leading indicator? We are talking about lagging indicators. They have their own problems, right? And by the time you know that it is already things have happened, we have to be quick because we are day traders. Some of us are scalpers, some of them are swing traders. So divergence is a concept. Now I'm not going to explain. Where, for example, the price is moving in one direction and the corresponding indicator, which is supposed to move in the same direction, is moving in the opposite direction. Take the example of price moving in let's say a Bollinger band and an RSI. Price is increasing, RSI is decreasing. So that is a divergence. So why to note the divergence is important? Because divergence means the trend change is going to come, imminent. So when there is divergence, you can more or less either should exit or wait for the entry in the opposite direction. So divergence, there are indicators, and you should have an idea about this. Most of this you need to do some more research. I am only like a signal post pointing to you, guys, you go in this direction. This is the safe way and you will reach your destination. So think of me as a signal post. I'm not a book or an author. I myself, I'm learning many of the things every day. So I can only give you pointers based on my own experience, right? So what I found important, these are all just points I just noted it down. Next thing, candlestick patterns. Now, there are PhDs in candlesticks. People have done, I know, for 15 years, 20 years of candlestick analysis. They can very easily get a doctorate in any university because, and you will see them in the TV, right? The technical analysts. There's so many indicators. Then they say that, okay, you have to combine two patterns and make it into one pattern. There's so many concepts and numerous, right? We don't need to know all of that thing because we are not purely trading on unless you are a short, pure candlestick trader. We did one session also by Arvind Elango, if I remember correctly, but that was not followed up. We will try to do it again. But I'm going to point out for Bollinger Bands, what candlestick pattern you really need to know. There are only 7, not easy. Just 2 hours you can master them, or you keep on repeating, you can do. But candlestick pattern is one because there is also an indicator to point out the candlestick pattern at the time of reversals, right? So we'll talk about that. We are going to do that. Okay, similarly, chart patterns. You know the difference between candlestick patterns and chart patterns. So these wedges, why chart patterns are important? Because the breakout, when you're talking between range and breakout, or the breakout, if you want to really know, then you need to have an idea about the chart patterns. So what kind of chart you are doing? There are so many different types, triangles, breakout, wedges, what you call double top, double bottom, cup and handle, things like that. There are many, right? I'm not going to tell everything. So that is another thing. Okay. This is, there is a spelling mistake, I'm sorry. This is what is called time-based confluence, right? If I forget something, you tell me. I'm trying to cover all of them quickly. What is the time-based confluence? You remember when we were talking in Nilesh's presentation, he was talking about grandfather, father, son concept, right? So you have 3 charts. So you see what is the pattern of the chart in 3 time frames. Let's take, for example, 1 hour, 15 minutes, 3 minutes, or 5 minutes, right? These are T time frames. So what is your 1 hour time frame is saying long trade? What is your 15 minutes saying long trade? What is your 3 minutes saying? You can say either long or short. Okay, so you are sure about your longer trend, you're doing a day trading, but you are at a point where you are in a short, the prices are going down, the trend is short trend. Whereas you have 15 minutes and 1 hour is saying it's a long trend. So how do you handle that situation, right? So this is what is called time frame. Yeah, it is not frame, it is flame. Let me see whether I can change this. Now I was wondering what was the spelling mistake. Okay, time frame confluence, right? And so this is the confluence. Just remember that grandfather father thing. So it is both, even when it goes down, there is a way to do. You are asking about this question, what Srini was asking, is it a dip or is it a, reversal, or is it a pullback? So this is what you will know. This you have to find out. This is one of the things that will help you, whether it's a pullback, because the short term is not alignment with the 15 minutes, 1 minute. So this must be a pullback, right? Not only that, there are other factors which I'm going to explain later. But so this is one of the things. Well, how do you find out? So without knowing, you can't toss a coin and say, "Oh, I wish it's a pullback," or "I wish it's a reversal." We can't do like that. So you need these skills, this kind of knowledge. So you will have more conviction in finding it out what actually. See, remember one thing very clearly. The market is full of operators, right? The market is full of foreign investors. Market is full of domestic investors, retailers, mafias. Everybody is there, okay? So it's a huge market. Nifty, Bank Nifty futures is now, they say it is the most traded instrument in terms futures in the whole world, even more than USA in terms of the quantity, not in terms of value. So when you see so much people are involved, all kinds, definitely all kinds of people will come because the money is attractive. So what do? We are just a retail trader trading few lots, and they are all these big whales. They will eat it alive. They will eat us alive. So what do? There's only one way. It's a hopeless situation. What is the answer? The answer is the price chart, right? Price, what do you call, the chart, which is a price action chart, sorry. So the price action chart, in spite of all these things happening, it can't be done over a sustained period of time. They may just do one big candle, that's all. After that, their 300, 400 crores is finished. So nobody can manipulate a market where there is a lot of liquidity. That is why you trade in an instrument where there is a lot of liquidity. If you trade in an instrument which has less liquidity, of course, it can be manipulated. There are a few players, and then many examples, like you can take IRCTC case. It's one of the most news-driven manipulated stocks. So, but then when there is a liquidity like Bank Nifty or Nifty, so really there is less chances of these people trying to manipulate. So that is why we have an edge. We are educated. We can know, we can master these tools, and we can compete with them. That is the edge of the retailer, the price action chart. So understanding these charts, taking the tools, getting that expertise, having the conviction, doing the hard work, whatever it takes, definitely it will work, right? And that is why why I concentrate so much on this price action, because that is the only way out for the retailers, okay? So we talked about time frame confluence. Trend trading, this we have discussed a lot. Renko, so many indicators we have. In the first section, we were talking only about trend and momentum. So identifying the trend, okay. Now, in spite of that, how to identify trend in the morning itself, right? You have, for example, CPR. It gives you an idea, they say, about whether it is going to be a trend, what's going to be the kind of trend. So you should have an idea about CPR. There are other things, open interest, another thing. So that will give you an idea. How the market closed the previous day, right? That is another idea. How the global cues are doing. So what is important? Of course, you will know about the trend at the end of the day. That is not the point. The point is to anticipate in the morning itself, when the market is in the beginning stages, what you call before the range expansion, right? Market has 200 points in at 920. Then slowly that 200 points in Bank Nifty come to, let's say, 1,000 points range, right? So that is that range expansion. Before that, you should know what is the trend. You should have a clear idea. So this is another skill that is needed. Okay. Now, I will stop after this for some questions, and then I will continue. There are only 3 or 4 more ideas to do. Another point is fresh short trend continuation. So you have to understand when a trend is there, when you identify, is it a trend continuation of the previous day or the day before or this is going to be a fresh trend. Okay, so you need to have that. It's a different topic. It's more on stocks than futures, than on indexes. I will come to that separately. But basically, that's what it is. Now, using higher time frames. See, one big handicap we have as day traders is we are not able to do higher time frames. For us, higher time frame is what? 1 hour, right? If you do 4 hour, half day is already gone. So our higher time frame is 15 minutes, right? So, but all the indicators you should know, they all will be perfectly working in a higher time frame. The problem comes only when you go in a 1 minute, 3 minute, then the support levels, they are not really that clear. The trend lines are not clear because the short time frame, the indicators themselves, they behave differently. For example, Willy will work in 1 minute, 3 minute time frame, but not the other indicators. They are late. So only leading indicators like stochastics, like that, it may work. Even open interest, I do not know. Okay, so how, in spite of all this difficulty, you should toggle. See, people are asking, sir, what is the time frame for this chart? What is the time frame for the chart? It is not like that at all. See, I don't know talk much about time frames because you should toggle between different time frames. You have trading view. You put your what do you call in your default 1 minute, 3 minutes, 5 minutes, 15 minutes, 1 hour, or 45 minutes, 75 minutes. So you have to toggle and see what is this father, son, sorry, grandfather, that approach. What is the main trend? What is the big picture? For example, in GMMI, you know, when the red line is on top or bottom, the longer trend is bearish or bullish, you know, because those are the 5 moving, long-term moving averages, right? So why you do that? Because you want to have a picture of that in mind. Am I trading against the trend or I'm trading with the trend? Nothing wrong in trading against the trend if you're a deep scalper. If you're a deep scalper, you can trade with some experience, knowledge. After some time, you can trade against the trend if you're a deep scalping, right? But it has its own risk, one should understand. So that will come with experience. So what else we wrote? Okay, last thing is 2, the breakout momentum. So that we will talk about how to see the trade on the breakouts. Very important concept, particularly in the context of Bollinger Band. It's actually Bollinger Band is very helpful. See, people are complaining, oh, the market is not moving. The market is in sideways, right? So it's boring. Actually, it is the opposite. The more the market in squeeze, it is giving you definitely there will be a breakout, either side. So that is going to give you a very big opportunity to make money. So you need to wait, enter correctly the breakout. That is where the money is to be made. So if it is alligator is sleeping, yeah, let it sleep. But one said that it is only eating in the night because of the gap ups and gap downs. I think Rakesh said that. It was a nice comment. I was just laughing at that. Okay, so now this breakout, we are going to talk very detailed now in the presentation. Last one is Fibonacci levels. Fibonacci levels are important. Part of the presentation is going to be on Fibonacci levels. After this, we are going to go to next topic section is Fibonacci, and I will explain to you why it is important to get some expertise on the trades. So we have covered how many areas? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I spoke on 12 topics. I'm giving you 2 minutes, not a break. I'm opening for questions now because we are going to go to another subtopic on Fibonacci. Srinivas, are you able to hear me?
Yes, sir. Yes, I can hear you.
So can we wait? People can open. Look, this is the time to ask questions. Then if you want a detailed explanation, if you write it in the group, many of the questions doesn't have one-line answer. These are not black and white. So it needs communication oral, which is very difficult to type. So please hesitate. If you really has a pressing issue, burning issue, you want to ask in any of the things I told you, or if you feel that I don't have everything, or I don't have anything, or if you want to see in particular skill, if you want to expertise, whatever it is, please ask next 3 minutes for questions. Otherwise, I will proceed to the next topic. I really encourage people to ask questions.
Jagat sir, Raghu here, you know me, right?
Raghu,
Yes, yes, from
Yeah.
Bangalore.
Raghu, please your volume little bit high.
Oh, okay, 1 second, I'll switch off my file if you don't mind, please.
Yeah, okay, thank you.
Sir, can you hear me?
Yeah, I can hear you.
Oh, well, actually, me and Srinivas actually took a trade last week. I mean, Friday. We actually encountered a stop loss. But is it important for us to actually mark support and resistance equally before taking a trade? If it is in a resistance, should we not take a trade? Is my question. Sorry if it's a wrong question.
Okay, very good question. Thank you. Very good question. That is the answer is coming now. Okay. See, two things I told you. In the introduction, I said every support line is not a support line, right? I gave you this picture. You remember this one, right? There is a quality, right? So this is also a mistake. Huh? This is a S missing. Wait a minute. Can I type an S? No. Right. Okay. I will correct it. Normally, I put a spell check. Okay. Now, what I said is this, Raghav, to answer your question. See, support lines by drawing support lines, it's a very, very primitive method. We are far behind. We have technology, we have tools, everything. So this old method, support lines are very important. But the way we draw them, the way we use them is defined. I already told you about the area of confluence. When you are asking a question, can I take on the basis of a support line? But what is the quality of that support line? What is the area of confluence on that support line? Without knowing it, how can you decide that this support will hold? It is not because I have stop loss, I can enter anywhere. See, this is the first thing you have to go through this. You need expertise on this particular chart. If the quality of support lines are different, they are not the same. Every support line is not has the same weightage, right? So you have to understand this. So then only it makes sense, right? Okay, that's what I was trying to explain. Now we are going to go more deeper into this support and resistance trading. Just putting a stop loss also, not 20. I also explained of this. It is when your premise or the original idea gets invalidated. We'll come to that. So I can only answer in this way that you need a better understanding of the support lines. It's not just taking entry because we take few entries, as I said, quality trade means quality entries. That's more important than just taking an entry, many entries and making this 25. I will talk about that 25, 30 points later also. So no more questions. Can I go to the next topic, please? Srini?
There is one question in the chat from Rakesh, sir. Like how to, his question was how to use grandfather, father, son concept in Renko. Whether should we change the time frame or brick size? That's the question.
Definitely, you have to. We remember our first chart, Rakesh was not there. You remember trend identification, I showed a 15-minute Renko chart in the original 4. Not 4.1. That time we had 2.1. Definitely, if I have time, I will show it to you. You show a 15-minute. In fact, I did it on Friday. I will show it to you in the Friday chart. It is a trend, completely good trend. I traded based on this grandfather. This every day I do that only. I need to toggle between the time frames. So when people ask me, sir, what time is the time chart? I never give, if you notice, I've never given an answer. This should be on 1 minute, 3 minutes, or 5 minutes. Everything should be compared different using different, where is this, time frame confluences. So this point, time frame, can you see my screen? Yeah.
Yes, sir.
Yeah. So this time frame confluence is an important concept. So, but as I said, you can trade on a shorter time against the trend, but you should know what is the trend. Renko in fact, Renko is very good in showing the trend. In fact, people use mainly to find the long-term and short-term trends and medium-term. So the answer to your question, Rakesh, is definitely yes. Renko works very well with that. Next question, anything else?
That's
Okay.
all.
Yeah.
That's all.
Shini, can you go ahead?
Yes, sir.
Okay. Have you checked the written chat questions? Anything? No?
Yeah, that's all, sir. I mean, that's the only question.
Okay. Thank you, Rakesh. Okay. Let's now go to this famous Fibonacci. Okay. So you see the photo of the man. Of course, there was no camera at the time, 1170 to 1250, right? So I'm sure you guys are, most of you are engineers, and I don't need to take the cold to the castle. So you must have definitely learned in your statistics class. Srini, you are an IT engineer, right?
Yes, sir.
So just to get, for my own curiosity, because I was mostly out of India for more than 35 years. I left when I graduated from my MBA. I did it here. Then I finished my chartered accountancy. I left India. So I'm just trying to find out when do they teach this Fibonacci concept? At what level in the school or college, or is it only for science students? Can you just tell me?
So we got it as part of programming, sir, in college, say first year.
You are talking about your IT course.
Yes. Yeah.
I'm asking, suppose you are a 10+2 science graduate, right?
Okay.
Do they teach Fibonacci there in 10+2 level?
So from my side, no, I haven't. I mean, I got to know it in college only, sir.
In statistics class, right?
Yes, sir.
Okay. So, why I'm asking this question, to what level I should go? Because if you are already people who are experts on Fibonacci, then it will be boring and then it will be a waste of time. Any other view that people are they very familiar with this Fibonacci? Because all the time we hear the word. What is the level of knowledge you have? I just want 1 or 2 people to confirm so that I will decide quickly. Quick, please, 1 second. Anybody want to comment? Say something.
Sir, don't have much idea on Fibonacci, sir.
Okay, nothing wrong. That's what. See, I'm not aware of the Indian system, even though I studied. Later on, I lived in many places. So in fact, I was in the international school board myself, also on a voluntary position. So there, the things are very different. 1 second.
Hey, Paul,
Okay.
can you hear me?
Okay, now let's start now. Okay, I will do in a medium level. Neither I will go to.
Can you hear me?
Yep. Yes, please. If you are asking a question, unmute and ask. Otherwise, let me proceed.
No, sir. Like this is just to answer to your question which you asked, like how deeper Fibonacci is taught. Like I studied Fibonacci in the college, wherein we have not approached Fibonacci in terms of problem solving. It was just part of the very top layer, so we don't have a deeper understanding on Fibonacci.
Okay.
That's what I want to say.
Okay, good. Thank you so much. This is the answer I was expecting so that I know what to do. Look, Fibonacci is very important as a trader, right? It is very, very important. Okay. And this will answer many of the questions about the support levels, why things are there. So let us pay attention and don't take it that this is something to do with physics and beyond me. It has to do a lot with trading. It has to do with our life itself. I will explain to you. Okay, right? So important concept, which is not difficult. Of course, I'm not an IT engineer, but I did statistics, so I am interested in statistics. In fact, I keep my password based on, believe me, on Fibonacci numbers. If my password in all my websites and other things, banks, transaction, is based on Fibonacci numbers. Okay, so let's go quickly. Now, this is not like a claim normally you get in India that we invented everything, right? So it is based on actual verified source, right? I quoted the source in Investopedia. It's also in Wikipedia and everything. It's a very accepted thing. So it's not at all claim that these numbers originated from India originally, right? Okay, a lot of research has been done. There are books also on the origin of Fibonacci numbers. So 3 names. I don't know whether you heard this name. Akarya Veerashankar, 1. Gopala, that's my second name. Hemachandra and Narayana Pandita. So people only talk about Aryabhatta and other people. I don't know whether you are familiar with these names. These are the people originally 600 AD. These numbers where there is clear proof that these numbers were used. However, in the Indian society, they say it existed around 200 AD. So we are talking about 2000 years old concept that we are using for trading. Okay, so now it has existed for 2000 years. It has made value even now. People are doing the PhD projects on this. So if something has existed for 2000 years and then it is alive and working, that means it has some value. Okay, so that's about Fibonacci. Fibonacci is in Italian. Okay, you must have heard these numbers, what you call Fibonacci, primary numbers, prime numbers and Fibonacci numbers. I'm not going to go detail into this. You will do the research yourself. Very simple, just go to the Wikipedia or do Google. There is so much. And by the way, after you start, it will become so much interesting. Okay, it's worth doing it. So you have 0, 1, 2, 3, 4, 5, 6, 7. Then to get these Fibonacci numbers, what you do, leave the 2 digits, then take 0 plus 1, 0.1, then 1 plus 1, that is the number, which is 2. So this is the Fibonacci. Then you get 1 plus 2, 3, 2 plus 3, 5. That is one previous number plus the other number, subsequent number. So you get this Fibonacci number 0, 1, 1, 1, 2, 3, 5, 6, 8. So below you can go on like this. It is going 43, it will go endless, right? Into millions. This is the Fibonacci arc. We'll come to that. In the next, when I show you some photos, you will understand what is the value of this. So basically, Fibonacci numbers is a system of adding numbers, and then there is what is called Fibonacci ratios. Then different concepts are there. We are going to talk about it. So these Fibonacci numbers are very universal, right? What is so great? People call it is God's number or God's hand in that number. There are 6 photos. All are based on Fibonacci arc, they call it. I've shown you the first photo has got the petals in a flower. Second also there. This is a snail. The third is the cosmos. And I don't know what is the other one. This is about the way the cat jumps, snail, and the other thing. Taj Mahal. Then you have the entire our galaxy, Milky Way galaxy, human face. And this is another flower, or I think it's a cactus, if I remember, right? Now the tree, when it grows Fibonacci numbers. So this is about how Fibonacci numbers exist in nature, right? So that's what this illustration is about. How many are the nature? So what is the explanation? Do your own research. You will definitely find. In fact, I will tell you this number 23.6, if I remember correctly. The earth, the angle, the earth is what do you call it? What do you say that? Not twisted. It is not. It has got a slope, right? Yeah, it has got a slope, and the slope in which it is twisting is 23.6 degrees, 1.1 less than Fibonacci. So similarly, when you take the entire galaxy and other things, astronomers, they use these numbers. So that is about this. Now we come to, we don't go more into that. You please do the research. We come to when it is useful in nature, when it is used in astronomy, in physics, in human biology, in all sciences. Why can't it apply to trading? Does it work? The question is affirmatively, yes, it works. And I've used, even Friday, I use this Fibonacci. I'm going to show it to you on a Friday market itself, right? Okay. Now, instead of going to all the thing, if you go to trading view, look at the left rail on the drawing tool, there is a section called Fibonacci. There will be about 12 or 14 different things, including pitchfork and all the stuff. I'm going to tell about 3 important things which are relevant to trading, and I'm going to talk only about one important, right? So that is the scope of this particular presentation. So what is Fibonacci retracement ratios? So these ratios, by dividing one by other, third number by the first, right? They give you a ratio. This is called Fibonacci retracement levels, right? You asked me also what is a pullback and retrace the reversal. All these questions will be answered slowly. So let me read quickly for you. Fibonacci retracement levels are 23.6, 38.2, 68.2, and 78.6. Fibonacci, while 50% is not a Fibonacci ratio, it's also used. So draw your Fibonacci within such as high and low. The indicator will then create the ratios between these 2 points, which I will show it to you. Not a problem in trading you. So these are the levels, Fibonacci retracement, which you should know. In fact, after some time, you will remember the 23.6, 38. I told you the earth rotation is 23.5%. You can check it out. So all these levels you will know by heart. Don't worry about it. This retracement also, we are going to see it in trading view. Okay. Now the second is called Fibonacci arcs. Finding the high and low of the chart is the first step to composing Fibonacci arcs. Then with the compass-like movement, the 3 curved lines are drawn at 38.2, 50%, 61.8 from the desired point. These lines anticipate support and resistance level as well as trading ranges. So how can you draw a support resistance level? We know about the way you draw. This is the way a support and resistance level is drawn. And it will hold. You will see when every time it will exactly hold these levels, support and resistance levels. As I said, it is not also a universal constant. It is also used very much in trading. So that you are going to see, it may be new to you, but it happens. It's that we should become aware of this. Let me know the time. Okay, so we have less time. I have to do these Bollinger bands also. Let's see. Okay, Fibonacci fans. These are the fans on the right. You can see are composed of diagonal lines. After the high low of the chart is located, invisible horizontal line is drawn through the rightmost point. The invisible line is then again same ratio. Lines are drawn from the leftmost point through each of these points. These lines indicate areas of support and resistance. As you can see in the chart, it does work as a support and resistance. You can see here and here. This 50% and 61.8, I think. Yeah, yes. And similarly, the previous chart also, you'll see the arc. You can see the resistance. These are from actual charts. You see the support here. right? And these lines, and similarly, this is another line which will come in the Fibonacci itself, the diagonal line. Okay, so that I will explain, show it in the TV chart. I will show it to you on a Friday chart itself, what happens the last trading day. So there are three things we said. One is Fibonacci retracement, right? And the other, where is this? Why it's not coming? Yeah, Fibonacci retracement. Then we have Fibonacci fans, then Fibonacci arcs. Fibonacci zones also, okay. The fourth thing is called Fibonacci zones. What are they? They are a series of vertical lines. They are composed by dividing a chart into segments with vertical lines spaced apart in increments that conform to Fibonacci sequence, which I already told you, 1, 1, 2, 3, 5, 8, 13, etc. Each line indicates a time in which major price movement can be expected. Does it work? Yes, it works. We'll show it to you. So that's about this. So what is Fibonacci retracement? Levels are produced by taking high-low points on a chart and marking the key Fibonacci ratios on a horizontal grid. So, sorry, you can see this 0.236. These are Fibonacci ratios. I mean, this is a illustration chart to show how this in a chart, when this is drawn, how these things you can see here, 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 here. So this net you will see in every day, okay, including two. I think I'll take two days of the chart. Okay, now, okay, this came, yeah.
If you don't mind, it's superb topic, but it is really very high to digest. I mean, can you break it up? I mean, can you go back and explain the other one? I think it is really overloaded. There is so much knowledge that we are not able to. This is too much for us to take in a day.
Which is too much? Fibonacci numbers are too much?
Yeah, Fibonacci is really too much, sir.
Then leave it. Leave it. You trade. We are talking about the. You don't need to know the numbers. See, Raghu, it's like this. There are so many concepts which really, if you ask you about, let's say, bands, very detailed, how the bands are calculated, what is the band ratio, and what is the formula for those things. See, because people do not say they are not familiar with Fibonacci numbers and the concept. You don't need to know anything about it. What you need to know is to just to draw in trading view the Fibonacci retracement levels, which you can do in 3 minutes, right? Like the way you learned to draw the CPR levels, like the way you learn to draw the pivot levels, you need to do. This is one form of retracement level, which has very high value. People are trading. Now, the question is whether you are interested to know the science behind it.
Sir, 1 minute, if you don't mind. I am not telling you, you are giving a superb knowledge. Only problem is we are not able to digest so much knowledge which you have together.
Are you a science graduate, Raghu? Are you a science graduate?
Oh, yes, I'm big.
Okay. Now, that is why I asked the first question, whether it was taught in the colleges. Now, see, the thing is, Raghu, we have to be open-minded, right? It is not easy. It will look like that. But please, just 2 days, you go and Google it, you'll all become familiar. I know people, they think, but just out of curiosity, you check, it is not at all that difficult. And again, you don't need to know all the science. See, like, as I explained, Bollinger band, there's so much concept why the bands are calculated. In Renko, there is so much how the bar percentage should be kept and all these things. What you did, I gave you this percentage, 0.075%, change the bar value, and you do it, right? So if you think that is enough, it is fine, no problem. So, but we should at least have some basic idea of what is the science. What happens if you do not know, I'll tell you. When the market changes, when you said Billy is, let's say, minus 95. We used to have minus 92, minus 8. Now we are minus 95.5. So when the market changes, if you do not know the basic idea, what is the rationale, you will be using it wrongly. The indicators all need to be changed. Really need to be changed, right? Every indicator has got, you may see input value I've changed, right? Sometimes even RSI, I'm using 9. Why I'm using 9? It's a different thing, okay? So even Bollinger Band standard deviation can be changed. So unless you at least know some knowledge about the concept of a tool, what you are using, what will happen if you use it blindly, when the market conditions change, the basic assumption on which that indicator input values were set, they change. So the indicators will not be useful and you will be taking a wrong trade and making it at a loss, okay? So to continue, what I'm saying is, look, actually Fibonacci, if you go to the TV trading view, there'll be 14 different things. I'm dealing only with one thing, which is Fibonacci retracements. We are going with the science of it. We are going to now go to the actual trading. Okay. So it is important, right? So if you want to be a good trader, you should know Fibonacci retracement because it has value, it works, right? And many people trade using that. You go and do the amount of discussion that takes place in any trading website, you will know. Okay. So now let's go to the levels. Okay. Now, can you go ahead, or is there any other question?
Sir, can I ask you a question?
Yes. Is there any other question?
Yeah, sir, like on Fibonacci, are we also going to talk about the traditional and Fibonacci both?
Sir, even the transcript is not coming. You need to speak slowly and loudly. Otherwise, Srinivas has to translate for me.
Your voice is not clear, Viva.
This is Kripaji, is it?
No, just not Kripaji.
No, Vivaham Raghav.
Okay. Yeah, please ask him. Find out his question and tell me.
Yeah, he sent it chat, sir. So he's asking, are we going to discuss about traditional levels?
Traditional level of what?
Sure.
What do you mean?
On pivot, he's asking traditional levels on pivot.
No, we are going to talk about Fibonacci levels.
Okay.
That is what it is. We are going to now talk how to use Fibonacci levels. Before, actually, we are getting out of time. So I'm going to do it quickly now. Okay. As we are not going to assign, but once we have to do, yeah. Okay. So this is what it is. Fibonacci levels drawn on a chart. As you can see, the levels are respected, right? They have put the 0.94, 0.278. I think I cannot read properly. These Fibonacci ratios are on the left side. As you can see, it respects here. There is support. There is resistance here. Resistance. So broadly, it is showing that these levels are respected. So these are not traditional lines, and I do not know what you mean by traditional, but they are the things. Now this is another chart showing it. Now I'm going to show you the the Fibonacci chart. Okay, I will go to trading view. When I go to trading view and show at the time when we are doing Bollinger Bands, this is actually taken from a Friday chart. Wait a minute, let me see whether I have these, 1 second, whether I can draw it from here. Yeah, okay, let's go. This is the actual chart, right? Okay, this is the actual chart, Fibonacci. Let's see what happens. I've drawn the chart on Friday, 1st July, right? Srini, are you able to hear me? Are you able to see the chart?
Yes, sir.
Okay. How to draw the chart is another thing I need to explain, which is, I think we are over, time is a problem. Let me see. Okay. I will explain to you how to draw. The Fibonacci retracement tool is here. Okay, maybe because of that, all these things are Fibonacci tools. I don't know whether you're familiar with this. So we are going to do with only one, which is the first one, Fibonacci retracement. All the others we are not going to do now. We are going to only talk about this. So why there is so much options are there in TradingView? Because people are using. That's why they are taking. That's why the quality of trades is there. That's why they are able to make gains. They are able to be successful. We are going to do only Fibonacci retracement now. Okay, not any of those things. Fibonacci time zone we shared. I talked about this, and what else? GAN, no. Pitch fan, no. Okay, we talked about Fibonacci time zone, which also I will prove to you, which different time. Okay, let's take this. Can you, sorry, I should not have pressed. What happened? This is, okay, it's gone, I think. Gone? Oh. This is always a problem.
Yeah, you can click on escape, sir. That should go. Escape.
Wait, escape, yeah, okay, thank you very much. Yeah, look, okay, let's go into this. See these levels. Okay, what is this line? This is a trend line of Fibonacci. What I've done, this is a Friday actual chart, TradingView, okay? Now, I've connected, okay, this is, I'm doing it on the past chart. How to do when you are in the live market, I will explain to you, there are different methods to do. You look at this trend line on the chart. On the left side, if you can see, the ratios are there. Can you see it? 63.1, 61, 30 and all that, right? There's something here. 0.23, 0.38, 0.5, right? 0.61, 0.76 and 1, right? So it goes from 0 to 1. This is the range of Fibonacci levels. Why it is important also, you will understand as we go by. So these are Fibonacci levels. Now, this is on the left side. On the right side, you have Bank Nifty price levels, right? Okay. Now what I did, I don't know whether you know, just you can use it here to get any price here, which is what I did in this. You point anywhere, the price will come. So it came, data 33, 131 was the low, and 33, 740, around that was the high. Now that it's over, I've drawn a trend line connecting this and this. This is a Fibonacci trend line, okay? Not nothing new, it's available in the tool. Actually, it draws that you have to adjust. See here, right? Support level. See here, one. The entire range here. Srinivas, can you see here? Resistance. Here. See the support here, here. The resistance here, here. Another one. It's all over. Can you see? And it goes at the Fibonacci, what number is that level? 0.236. It's not showing because it's above. So look at this 0.236. Again respected. Again it goes up because it was a bullish day. And here, so you can see even here and here, there are so many examples. So this is the Friday actual chart. Do you see that, Srinivas? You are now talking on behalf of everybody. So I'm asking you, if I ask everybody, yeah,
yes,
is it
sir,
clear?
Yeah, yeah.
Is it clear that the Fibonacci levels are respected?
Yes.
Here, many examples. I can go on, I can draw the previous day and show you the exact, I didn't have time, otherwise I would have drawn. So this is the beauty of Fibonacci levels. So this is one of the strongest levels. So if you say that, okay, I've drawn support level, everybody draws support lines. Why they are not able to succeed? Why all the trades are not successful? Everybody is drawing support line, resistance line. But are they drawing? Are they taking the correct trade on the support zone, which is what I explained? Clear? So I will leave. In fact, I wanted to show you how to draw during a trade. Maybe I will show you here, right? Okay, any point. If there are so many methods I think one is that demark method, or many people draw in differently. You can try it, or I will, okay, what you do, you are in the middle of the market. Say you are somewhere here, let's say, okay, this point. You are here at 11 o'clock. Now you want to see the Fibonacci numbers. What you do? Mute, please. Srinivas, keep a note, yeah?
Yeah, I have muted. Sir. Yeah.
Actually, this is, not good. Okay, so let me not complain. Just give me a few seconds break.
Sure, sir.
Okay, so how to draw? Does anybody, Srinivas, do you know how to draw Fibonacci line, retracement levels?
Yes, sir. Yes, I know.
You know, okay.
Yeah.
Okay, so for people who do not know, very simple, I take a point here and, okay, actually you take a point here. I'm using, you may be using different method. I will teach you the method where, what I use, right? Okay, so let's just see, there are different concepts. Just draw a vertical line. Suppose you are trading here, you take the highest point, this point you can take, or even this point, because you know this point. So first you draw a horizontal line, okay, define. So here, okay, here. Then what you do, you draw a vertical line. Confirm to me whether you are using the same method or a different method. Okay, then you draw a vertical line, right? Then what you do, you draw another horizontal line. Which is here, right? Now it should be noted, it should be drawn, including the wick, because there has been trades in the wick also, sorry, the tail also. So we must take into that consideration of that. So now what we have is a point, a low point, it's a high point, right? So you are somewhere here, right? This. So just take this high point. Sorry, okay.
Yeah. Jagan sir?
Wait, I know. Start from the bottom. Okay, sorry. Yeah, what you are saying, Srinivas?
No, not me. Santosh.
This is Santosh here. Jagan sir?
Hmm.
I think the bottom horizontal line is wrong. You have to take it 11, right? You were deciding to do it 11.
No,
the live market.
No, I'm going to draw see, I'm in this point in time, right? At that time.
Yes. Yes.
Oh, yeah, okay, you're right, because I'm taking a forward point, right? That's what you're saying, right?
Yeah.
Yeah, correct. Yes, I agree.
Thank you.
Yeah, because I'm taking a forward point, which is not available to you at that time. Okay, so, okay. Here it's okay, still you can draw. So this is the area you're going to draw. Simply take the point here and start from whichever the point I was trying to trade is here. Okay. Now, what is important is, let's say here, which is the highest point here. Okay. Now I'm roughly drawing. So this is the lowest point. Sorry. Connect the lowest point. Right. So this gives you a level. Let's see whether it's respecting. Here, yes. Here, see, completely. I mean, you cannot take it 1 or 2 points down, maybe there, but how many hits are there? You see 1, 2, 3, 4, 5 here. Similarly, it becomes a resistance here. Then here, you see the area it's taking. And this one, I think the top wicks touches, if I see it correctly. So this is how it is basically. We are not going to go very deeply into that. there is different methods. Santosh, do you follow this method or something else?
No, I don't do Fibonacci. I'm just learning from you now.
Oh, I see.
Interesting.
Okay.
Yeah, thank you.
Yeah, but the point you said was correct, that I took a forward point. 1 minute, huh? Meeting. Sorry. Yeah, okay. There is a simple thing I didn't, because of the time factor. This the method, this will work. As you see, it is working, right? We are drawing correctly. If you are not drawn correctly, what it means is, how do you know that whether you're drawn correctly? If it doesn't support, these things are not working, that means you're not done correctly. It's very easy to learn. In 10 minutes, you can learn this, not a big deal. So if it doesn't work, the levels are not respected, the problem is not with Fibonacci, the problem is that we have not done it correctly. Okay, right? So let me remove this. Okay, so that's about drawing Fibonacci. Let's go back to our presentation. Let me close this. How do I go back to my Zoom? Yeah. Okay. Sorry, where is my original presentation?
I think right side last, sir. Last tab
This one?
on top. You're talking about the PPT, right?
Yeah, here. This
Right
one?
side, right side, right side. No, on taskbar.
Taskbar.
More, it's on upper side. Last one.
This one here?
No. Last one, sir. After last tab.
Here.
Little bit up. Last one.
Oh, here. Yeah, okay. I meant. Okay, got it. Thank you. I could not see it. So what I do, I go back to the presentation. Let me close this window. Okay, so I've shown you the Fibonacci. Now we are going to go to the Bollinger Bands very quickly. That's on the actual trading 9:15. Okay, so let me try to finish in 15. Okay, now again question time. Anything else?
Sir, Srini here. Regarding Fibonacci, right? So people say 0.618 as a golden ratio, right? So whenever the price visits that level, stronger probability for it to either reverse or...
Yeah, 1.26. Yeah, yes. So we'll do that golden ratio, not now, right? Yeah, that is why it is called the golden ratio. We remember the arc I showed you in the photo?
Yes.
Yeah, that is the representation of the golden ratio. But we will do it. If you want, people are interested, I will do it again next week. But if people think that it is pure science and not needed, also is fine. The idea is how to improve your odds, right? You guys have to understand one thing. You are the retail trader, right? Who is sitting opposite you? The people, let's say FIIs and DIIs, right? These people are highly educated and experienced. A guy in, let's say, HDFC Bank or SBI or even all these Birla group people, you know the amount of knowledge they have, the expert, the fund managers, the amount of studies they've done. And people who are in USA, Indians, from which university they come? They are coming from Princeton, Georgia Tech, Harvard, Columbia, all the top institutes. They do their MBA or financial engineering full-time 2 years course, where this Fibonacci start for one semester. So no wonder Raghav is getting complicated, because for 1 hour semester course, I'm trying to do it in 15 minutes. So I do understand, things can get complicated, no problem. So what do? They come, and plus they have the internal training. Okay, like in your company, you have internal training. all these things, including stop loss hunting. There is a program. I know people in Goldman Sachs. They do all these things. They teach you every day. They have all the resources. They have all best of software. So these are the people who are sitting on the opposite side, right? Do they use Fibonacci? 100%. They use Fibonacci. Their algos are based on Fibonacci numbers. Believe me, they're all put, the algos work on based on Fibonacci numbers, most of them. So even if you are sitting and you are trading, every day you are losing 5,000 rupees, 10,000 rupees, and how many lakhs of people are there losing? Naturally, you will see their balance sheet, JP Morgan Chase, Goldman Sachs. Where do they get money? You see $500 million profit, $1 billion profit. It's coming from here. So if you say, no, I don't want to learn, I mean, whether you don't know the science is fine, but definitely you should know that the support resistance levels, you draw yourself, you will experience. Let's go to the Bollinger Bands, again spelling mistake. I think I should get this guy, Bollinger. You will sue me if I mispronounce his name, right? He's a very interesting man, in his 70s. So this is Bollinger. He has his website, bollingerbands.com. His book is called Bollinger on Bollinger Bands. He's available in Quora. If people are using Quora, I follow him. He answers most of the questions in Quora. Even if you write to him in his website, he does answer. If you have time, please go. Many answers to some of the questions you will hear from the horse's mouth, not from me, from the original author of the Bollinger Band itself, right? And he's a very interesting man, good man. So you can. Okay. Let's go to the pointers. How to trade. First, why Bollinger Bands is important. First, of course, we all know, used for buy and sell signals. Yes, it gives. Second, to find dynamic support and resistance areas. Yes, we know that it is giving those areas, 2 SD levels, 3 SD levels, and all those things. Third, when BB is parallel, I use the word BB instead of Bollinger Band, so please understand. Where is the unlikely to slay outside the bands? So when it is parallel, which we will draw, then it is very unlikely to go outside, right? When there is a parallel line, most likely it is it's alligator is sleeping. Okay. Fourth, add bandwidth indicator to confirm volatility, which we have not done. What is the bandwidth indicator? It gives you what is the width of the bandwidth. Right? There is a formula, which is what higher band minus lower band divided by middle band. This is a ratio. There are some people who calculate this ratio and say, if it's 0.3, I will take above 0.3, I will take a long trade. If it is below, I will not trade. Like that, there is a ratio. Some people trade on these ratios alone. But what you need to understand, this bandwidth indicator is important to understand what is the width of the bandwidth. That tells you about the momentum. That tells you whether you should be able to take a trade, whether you should take a trade or not, right? If you are trading in Bollinger Band, this bandwidth indicator gives you an immediate percentage result. What percentage is there? I will show you in trading. Where is just type bandwidth indicator, you will get the guy. I will show it to you when we go. Let's try to finish quickly now. Go fast. Search the BB squeeze pattern and wait for the imminent breakout. So this is what I was telling you before. Squeeze is not a bad thing. It's an opportunity coming. Certainly, it will break out. It can't go. The more the squeeze, the better the breakout. More expansion will take place. Somebody should stop their video, please. Somebody's video is on. Please mute. Mahesh. Yes, thank you very much. Okay. Now, another advantage. We are talking about another advantage. Bollinger Bands can be applied on other indicators to determine the entry and exit. We have done it on Renko. You remember? You want me to show the chart? Okay, I will show you the chart. We have done it before. It is this chart. Yes? Okay. So we have done that before. This is the Bollinger Band. Why? What is the shadow? Is the upper line and the lower line I've removed. Mahesh, please. Okay, upper line and lower line I've removed because I don't want too many lines. This is the latest chart, or I made some one change. I don't remember exactly. So then I put the fractals are on the top to show the thing. So we are using Bollinger Band in a Renko strategy. That's what I'm trying to do. Then this is BB20, RSA EMA. I'm using that line to give this signal. You remember this line? To give the buy, sell. See how nicely it works? Perfect, right? So this is one of the RSA MA. This is my own invention to use the J line to do the indicator. You see, the point, the thing is, okay. Then we use with other RSA MA indicator and all that. So basically we are using, the point I'm trying to drive it is, we are using Bollinger Bands to, and you see the Renko, it respects, see the top, bottom, everything, it goes. And you see the expansion taking place. See the trend also, it is, this is Friday, is it? One moment. July, yeah. This is Friday chart. I'm taking the Friday chart. So see, it is an uptrend regularly. There was no confusion. Many people could not trade, but I use this chart also. So we do that. Now again, let me go back to the presentation. So I want to show that. Leading indicator. Okay, use BB in combination with leading indicators. We are going to come to that. I will talk about leading indicators. That is important. What are the leading indicators? How to use them? One leading indicators is OBV, on balance volume. You have not used, I use it. We had in 1.1 or 1.2 chart, it is OBV is used on, I think, volume. Who presented the volume? Volume was presented by Sandeep. Sandeep is not here because he called me to say that he's traveling back to Bangalore, so he won't be there. So does Nilesh. So, okay, so the leading on balance volume is a leading indicator. Stochastics is a bit of RSI, is you can say. So these volume indicators, money flow is a leading indicator, MFI. Then you have money flow, order flow. Also, there is an indication. There's an indicator, which is a leading, and also your open interest to a certain extent. So these are there. So use in combination with the leading indicator. Why? Because Bollinger Band is not a leading indicator. It is a lagging indicator because it is based on 20 simple moving average, right? So you have to, when what is lacking in your main strategy, you should complement with the indicator. That is the idea. So we use that. 8, pay attention to the reversal candlestick pattern. This is important. Pay attention to reversal candle pattern that touches the upper and lower band. See, now this is when I talked about the skills needed. You remember I said chart patterns you need. So not all the chart patterns. Now when you talk about Bollinger Bands, what are the chart patterns that are important? Bollinger Band is mainly a mean reversal strategy, right? So if you want to do that, you should know about what are the mean reversal indicators. There are only 7 or 8, at least what I know. I'm not a candlestick expert, but I know that there are 6 or 7 that are important. So there is also a I'll show you an indicator. You can find out when the reversal happens, the top high and higher low, whether any candlestick pattern is appearing, right? So what is this? BE is bulf engulfing, bearish engulfing, hammer, piercing, candle, spelling mistake again. And what else? Morning star. MS is morning star. So, and The dark cloud also, they say that's a reversal. So these are the things you should know. There's only 6 and 7. I will show you these indicators. Search for divergences in the upper and lower band. This is another important. We talk about divergences. Very important to understand the divergences, and you look for the divergence, particularly in the upper and lower band when it's nearing. If the divergence is a short trade, okay, upper and lower bands. Adjust the middle, maybe, okay. This 10 is not for you now. What it means is, why only standard deviation 2 and standard deviation 3? Why can't it be standard deviation 2.5? It makes sense. I'll tell you. If you want your price to be in the band, it rarely moves to 3. Mostly it is in 2. Mostly it is in 1 standard deviation. Sometimes it is in 2 standard deviation, and rarely it goes to 3 standard deviation. But it goes about 2 standard. So for me, I want to contain this price within the band. So what I do, I change it to 2.5. Okay, but the rule is, I will not explain detail here. When the moving average sitting, when you go, the lesser the average, the more is the width of the band. You have to adjust like this. For example, if it is 2.5, you can't have 20 SMA, it has to be lesser. So that is the meaning of that. We will not go into that. Now go into the candlestick patterns. So you have this percentage, this is all I think you already know. Hammers, this you should know and you should look for it. Then there is bullish patterns, bearish reversal, bearish reverse. These are the patterns. See, this is chart patterns, this is candle patterns, right? So this all people know, right? This arc and all this, all in every book, everything, there's no problem. Basic things, how many? These four bullish reversal, I'm asking you to learn only 6 or 7, right? And here it's also 4 sets of candlestick pattern. It's just 2 hours you can learn. Reversal candlesticks, okay, again, the same bullish engulfing, hanging man, hammer, bearish engulfing, piercing, shooting star, right? So, sorry, yeah. So I am not going to do on this candlestick pattern. And finally, okay, I need your permission to extend a bit so that we can, is it okay, Sini, can I extend by some more time? Because
yes, sir, I'm fine.
Fine, okay. Other people who wants to leave, because I put as 9:30, which we have only 2 minutes, they can leave and they can watch the recording, okay. Anyway, I'm going to finish maximum 10 minutes. So bandwidth is narrow. What is a bandwidth is narrow? So this, don't take this 0.5%. I copied it from somewhere. I have to check, right? Okay. So bandwidth is narrow when it is less than 0.5%. Chartists can use higher levels to generate more results or lower levels to generate fewer results. So when you adjust the bandwidth, okay, in your mind, if you think that what is a narrow, what's your definition of a narrow, it could be different for you. What is a squeeze means, this you don't know whether it's a squeeze or regular band. Some people think that, no, this is not a squeeze. I need a lower, even a thicker band. This is high for me, right? So anyway, this is the bandwidth reversal indicator I showed you. I'll show it in the TV. This shows now, that means it is the real squeeze narrow. When it shows high, see the expansion breakout has taken place. So use this to see whether what is your comfort level of trading, what it means squeeze to you, and what it means expansion to you. What is the bandwidth you would like to trade, right? Those type of decisions you can do. Sini, am I clear so far?
Yes, sir, clear, sir.
If just tell me if something above the head, if it goes.
Yeah, sure.
Yeah?
Sure.
Okay. This is again, what is this? This is showing another squeeze so that people have an idea of what is squeeze or sideways movement. And then what is the breakout is here. This is the breakout. you draw the line like this. See how he has drawn. He has taken 3 points, 1, 2, 3, 3, right? 1, 2, 3, 4 actually. So that is the line. Here also he has taken 1, 2, 3 points. Minimum you need 3 points to draw a line. Then there is the breakout. Where do you put the stop loss? That's another thing when we go really. Broke band, but not support. See, this is it. So it here, okay. This is why we talked about support and resistance. See, this is a good example. It broke the band here. So you will say, okay, it broke the band. I'm going to take a bullish trade, right? Here, long, which could have worked. In this case, I think it worked. In this case, it didn't work, right? Here, first case. Also, it would have hit your stop loss. Basically, if you have 25 point stop loss, it would hit. Here also, it would have hit your stop loss. So this is where, even though it broke the band, it didn't break the support level. So that's why your support level becomes very important to draw. So this guy's support level, so there's no trade here. It's very risky. So you remember that I told you the confluence area. So you need that confluence area idea so that you don't trade, Srini, particularly for you. You see, you understand, you took the trade, you thought everything is according to the rules, but it hit the stop loss. So people who trade, it is just, you need to get this area of confluence very important. Again, downside break. Okay, this is clear. What is not clear, this is also clear. This is what is it? This is the range, right? So you can see very clearly the squeeze is here, expansion here. Okay. Now going to this, again, I told you this 0.5, don't take it now. I need to check. Counter band is showing squeeze of 0.5 before breakout, volume increases. Okay. When is the breakout? What are other things? It is breaking resistance. The volume is increasing. Squeeze, before that there was a squeeze, then there's a breakout. See, this breakout concept is very important in Bollinger Band. That is where you get a lot of things. So you cannot miss a breakout. If you miss a breakout, mostly one big trade you are missing. So this is for the bearish trade. Similarly, exit, pulling away from the upper band, initial stop loss below the base, hard trailing stop loss at 20 MA. You know, hard trailing and soft trailing, 20 MA, which is the middle band, that is the stop loss below that. But if it is away, okay, now below the base, what they mean by below the base? This is the base. This is the breakout. So you put stop loss. I don't have the drawing too. Okay. You have to put it somewhere. Sorry, you put it here below that line. Okay, breakout line. So put the stop loss here on that candle, the breakout candle below here, which is the breakout candle here. This is the breakout candle. The stop loss will be here. Are you able to see Srinivas precisely?
Yes, sir.
Yeah. So you understand. So this is one way of doing. The other way of doing is what is called a hard stop loss. It is not visible, the 20 SMA line. Okay, I think it's clear. Let's see in the chart. Yeah, here it's there. It will be there. So put in the 20 SMA. It depends on how many points, right? Whether it is at your risk reward ratio, comfort level, so many things. So that is about the stop loss. You can do also, there's another way to do, which I will show you about the fractals. I will go. Okay. Now we are coming to a very interesting portion, Friday trade. Look, I will take a camera shot of the Friday, exactly my chart, and I've drawn. And from here, I'm going to take you to the actual chart and show. Okay, so this is an interesting portion on the trade. Listen very carefully. This is it. Look, I have marked, Sini, you are my sounding board. So one day I will be asking you, okay, for meeting. So see here, this is the entry point. Blues always are entry points. We mark black as the exit point. Entry, exit. Entry, exit, entry, exit. I took all the 4 trades, right? So now these are marked automatically. You show, or you go to drawing tool, you'll find out how to put this. You just put it, you have to click it, it will mark. So if you want to measure the points, just for example, what is it? 33, 622, right? This is 33, 375. Let's say 33, 622, about 280 points, correct? Srinivas, I'm correct with my calculation, right?
Yes, sir. 480.
280 approximately.
So sorry, it's 100 and oh sorry, yeah, 280, correct.
Right, it is 622 and approximately, okay? Quick calculation. So let's say this one, 300 plus 178 points, right? Correct, this one.
Yes.
Okay. Now let us assume I got at least 3 of the trades. Most of you didn't do much. I think Sanadip did good. If you remember, something like 350, 400 points he made because you took the first trade, which is a big trade. And there is also another trade in the opening candle. I'm not going to go in there because that's a different subject. Opening candle trading is a different subject. I don't want to mix it up with the trading. So now, how do I take the trade, Srinivas? Can you see this? Now, this is what I will show you in the chart very quickly. This is the KDA J line alone I've taken. This is very, very important. You put this KDA J line, I will show you. It works wonderfully. I've been trading on this for the last 3 days on Wednesday, Thursday, Friday. Perfectly worked. And the other one is RSA. You don't need any other indicator. You can put NMACD, but see, the thing is, NMACD, that is also not a leading indicator, but this one works very well. Okay, it shows by experience. I tested with many things and works very nice. I'll show it to you. Can you see here? This is the J line. How to put the indicator, I will show it to you when I go to the chart. J line, correct? Hello, Srini, say yes,
Yes,
sir.
sir. Yes.
Okay. This is the RSI top. What is the lines drawn? RSI 70-30, right? The usual RSI. RSI is 14. Above. See the thing. And it is touching which one? This is 3D, yeah? It's 3D. It is touching here. Even if it touches, you are not sure whether you can take the trade. You can still go up and up. I'll show you another case. How do you decide whether you take a short entry here? Can you do it only on Bollinger Band? Yes, you can, or you have been doing like that. That is the risk element. How after 3D also it can go up again, follow it up. So go here. It will reverse, I can tell you, guarantee you. This, I will show you again and again. The once KDJ is above this red line, I think that is 90 line. Right? I will show you. Yeah, I think it is 9. Wait a minute. What is it written here? Can somebody read? Okay. Whatever it was, it closed it. Can you read this, Srinivas? This
Plot 55. It says
55. So it closed at 55, which is neutral. Okay. It will reverse from here. You see here. Everything is an opportunity, golden opportunity. Take the trade here. This is 3D. Okay. Then exit here. We calculate the points. Go here. Take the point here. Now, you may ask me why I didn't take the trade here, the short trade, because it is touching. Then it's going down. I didn't enter because it's in this squeeze. It's more risky trade. So I already know, okay, what is not here is the band range indicator. Yeah, band range indicator. I've not added because I didn't want to crowd the chart too much. So I will not take the trade even though there is a chance. But there is also another reason why I'm not taking the trade, because you see the RSI, it is in no trade zone, right? Sleeping. Alligator is also sleeping if you go and check. So I didn't take the trade because even though this is okay, you cannot take any trade. If this is KDJ is there, but now I look at RSI, I look at Bollinger Band, there's a squeeze. So I don't take the trade. Here, opportunity for bullish trade. It is touching the lower band, good. RSI is the lowest point below the buying zone. Here, this is confluence, correct? Then again, it's struggling, because it's still in the squeeze. Actually, I should not take the trade also, but I took the trade, I wrote. Why? Because it is still in the squeeze portion. That you can decide only with the Bollinger or the band indicator, depending on your threshold. I was getting bored basically, and that's why I took the trade. Right? Is that the chart we are looking at? Yeah.
No,
No.
previous charts.
This one. So, yeah, but I was getting so bored, and I took it, and it didn't give me much points. 170, 170 points. I think I got about 120. I don't remember. So that was this. But again, I would really not suggest if you are a conservative trader. Then this again, the short trade, 35,366, 34. Why I took? See, I depend more on KDJ, then on RSI, then on the band. So first is, nowadays, these two are, all the three are important, but all the three must sync. Otherwise, it is risky trade. So Bollinger Band is giving. Now, so far, how we are trading? Based on only Bollinger Band. So it is touching the 2SD, take a short trade. Or it is touching below in the 2SD. So now we have another method to secure, to increase your probability or increase your quality of your trade. So this is what I'm saying. How do you increase the quality of the trade? So you look for the area of confluence, right? So these are the trades I took, right here. So this is the one. What is not, you may ask me, why there is another chart, which I will show you, the 2SD. There, I have added differently. You see my OBV is there, on balance volume. Then this KDJ is there, RSI is there. What is not here is my Willy, which is there in another chart. So because I wanted to show you OBV, I removed the Willy and replaced with OBV. But if you can have one more chart, or if you are doing 3D or BB, then one chart for this and one chart for additional indicators. Why Willy is important, I'll tell you. Willy is a short-term moving for scalping, right? It's scalping. So it will quickly tell you this reversal. As I told you, when you are doing reversal, not only chart patterns, candlestick patterns, you should also use the proper indicators, reversal indicators. Willy is a reversal indicator. KDJ, these are oscillators. Then open OBV, RSI, or stochastic also can be used. So here, what I've done is, let's see this. Okay, I remember I told you about candlestick pattern. So there is this indicator. If you look at it, swing high, low. Can you see this candlestick pattern? 21, last but one. Shini?
Yes, sir.
You see that? Yeah. There is this indicator, swing high, low, candlestick pattern. So it is showing there is a bullish engulfing, right? Okay, and here, is it a hammer? No. There was a hammer also, I remember. It's not in the chart, I will show you. There was a bullish, there was a hammer, I definitely saw that. So you must look, when you look at here, this is confirmation. OBV, it is still not giving the volume signal. RSI is giving okay, it is below the line. So, plus you are getting this bullish engulfing candle. So, a very clear indication this bullish engulfing is a good thing that in with the confluence when you are using, you can take a trade here. Similarly, you go, these are the levels here. Yes, it worked. Here it worked, the one from here, high. See, this high, this also you can use. These are swing highs and lows to mark, right? So that is about the thing. Let's go now. How many are there? Okay, let's leave the last one. Now I'm going to take to the chart directly. Okay, yeah. Let's go to 3 DSG chart. Okay, so this is the chart. Okay, now you have Billy also here. It is the chart I was using, RSI. So the one I marked and explained is this chart, Friday chart. Okay, there is Friday 2:30. Okay, so this is the chart. So as you can see, the Willy is also, now the only additional information you need to know, see when this KDJ line, see what is happening to Willy, what is happening to RSI. Let's look at this. I hope I'm not confusing you only. Okay, so you take this here, the point here. See, another point is whether it's crossing the EMA, 20 EMA line, the middle line, right? So we are more interested in this because of the potential breakout, right? So let me do. I normally trade on 3 SD and use it also for the same chart for 2 SD. So if you look at it more, shall I do like this and see? So here, let's note this point, 11:53, right? This is a start. Let's look at what happened in 11:53. I'm not going to go through, you guys can study, I can share it with you. And then 11:53. Let's see this 11:53. Here. Okay, let me draw this line. This is the line I remember very well. See, this is anyway, this is, sorry, how do we? Okay, this is the line. This is the Willy on a 1 minute chart. This is the KDJ. This is the RSI. This is the starting point of the entire bullish long trade. Can you see, Srinivas? Hello?
Yes, sir. Yeah, visible.
See the start of the thing.
Yes.
Now, people would execute, yeah, you can exit here. Yeah, now if you exit, I did like this because this is a sell signal. So in this tool HD, the problem is this. When you use the KDJ, then you become a real scalper, right? So if you take this, see within minutes, this will give you maybe 50 points like that. Very short scalping you want to do, you can do here, this break from here to here. Can you see? Like this. So here, everything is a scalping opportunity. Believe me, even though if it's scalping, it gives you good money, keeps on. But if you want to be a uh, uh, trader, meaning not scalping. If you want to look at, there's another thing chart which you use. I will show you the swings. So this is the swing low. I will show you there. So you take up to here. You see now, because it has never touched, you stay here for long. It is at 2 SD band. This is the entry point. You can take, or here you can exit. Yeah, this is one exit point. Let me put this one. This looks like an exit point. Which is the point? Correct. No, there is this exit point. Right. Yeah, Willie is crossing. Remember, I told you this is abstract. I want to change the color of this. Let's change it to use black, right? Okay, so this is the point. So if you want to measure, I don't think it is much, but let's see. Where is this machine? Okay, yeah. So let's take these points. I want to close it now, guys. So this is 33,278. That is, is it gone? So how much it is? About 100 points, 103, right? It's a small. So that's how we do it. So now we can go before, I think this is the one which was marked. Yeah, for myself. This is not for presentation. I marked when I traded. Yep. So that is where it is. So let me show you. Go to the last part of the presentation. Before, okay, this is the 3SD. Similarly, this is the link for 2SD. I will show you that also. Why I'm showing this? Because of the indicators I'm using. I'll say KD. Okay, this you may not know. This is something new which we have not done. Okay, there is a thing called Bollinger Band Trading Assist System. Okay, so you take this indicator. Let me. You put. Okay, let's talk a little bit about the indicator. You might know they've introduced these columns now in chart mode. Before it was not, this was last week. So where are we? What is it called? BB trading system. See this one by Zenolia. He has got only 33 views people are using. We are one among them. Maybe we are 10% of even 3 people use. We are 10%. So let us encourage this guy by using it, but it's good. See, this moves like this KDJ band. There is a band here. This will help you to trade. Going down, this. You can even use this one. When it band changes color, take a trade. So quick scalp. If you are guys who want to do, see here. See here, take a trade. See the other thing. You can, I mean, whether you take, at least you will trade on the opposite side. See, this is the thing. When it is like this, at least you will not take a short trade here. You will not take a long trade here. If you are taking a long trade, you are finished, right? For whatever reason. So at least it's giving you that Actually, it works well. Even though only 33 people have subscribed, and I'm one among them, I'm very happy with this. I do Bollinger Band 2 trading using this chart, swing 5-5. Okay. So what is the swing 5-5? This is the swing high. Okay. If I want me to do, quickly let me do one thing. What is the swing high is important. Oh, 5 minutes more. Okay, so yeah. So I've done even this Bollinger Band I can close. See, okay. These are the swing tops. It was very low range yesterday, but still there were, which is marked automatically. So these are the swing tops I told you, support and resistance level. These are the ones. So when you have a previous, see here, it retests here again. Okay, so you will go through those things. And the only thing is I wanted to show you is this Bollinger Band trading system. Okay, so we stop here about this. So what else is new in this? They're using Willy, KD, KDJ, I told you the J line. Okay, I'll show you the settings for this. KDJ. I've removed everything, plot, these two, right? Please note, plot, all these things are levels plots. Labels on price scale, I keep it because I mostly look at the levels only. I'm keeping this. So this KDJ is not the KDJ we are using in the our background chart and the KDJ. This KDJ is by Collins. Let's show you that also. So this is a please remember, don't get confused with that KDJ. So KDJ. This is normally what you use it by Imel coin, right? This is the one we are using in our charts and KDJ and in the background. But this is by Collins, right? So please use this indicator, and that is what is used here in this one. So make a note of it. Don't get confused. Okay, good. And what is this? Okay. So we have done Bollinger Bands. We have done these things. So, and this is what we did last, just because I'm showing you, this is a Renko chart we left with just before I closed down for memory. This is the chart we used, NMACD and RACD. We are finished with this. And I want to show you one final thing before I say bye. This chart I thought I will share with you. This is a Nifty 50 historical performance. You see how many, it is starting from all the, including Corona break, it is there. Yeah, COVID, lockdown.
Temperature yeah.
Okay, what is that? Mute, please. Okay, so this chart I thought I will share with you. So how many, what you call black swans they have seen? Still, the long term is good for Nifty. It is better than most countries. And if you really compare on a global basis, only in maybe US also and India. Okay, so we are doing in a good market. It is showing it has withstood all this 2000. I think that's the bombing. 5,000 marks. What is this? GFC erosion, NDA was win general election. So all this, what is called black swan events and demonetization, everything. Okay, just for the record, I'm sharing with you. Any questions before I close and I say good night? Hello?
Sir,
One minute.
yeah.
I'm looking at chart. Just give me. Wait. Sorry. Sini, you also look at the question. So not sure. 3,001 that is used. Share the chart, Srini. You have written yourself. And then Srini may know BB indicator. What
Sir,
is
yeah,
the BB indicator? Vivaham Raghavan. What is this?
yeah, in your chart you use 3-dove Bollinger band, right? That indicator is asking.
Yes.
Yeah. What is that indicator name is this question, sir? We couldn't find anything with 3-dove.
No. It is same Bollinger band. Instead of 20, you put 30. And you put standard deviation 30. I will show it to you.
Okay.
Wait. So, wait a minute. Wait a minute. I will show it to you. Let me read the other question. I'll come back to you. Normal candlestick. VP Verma. What do you mean by that? Sini, you need to explain this question to me.
Yes, I can, sir.
This is a normal candlestick. What does that mean?
Yeah. So you showed some Bollinger band chart, no, sir? So in that, is it the normal candle or is it Heikin-Ashi candle? That was his question, I guess.
Oh, okay. I use the normal candle. Why I use the normal? I can use the Heikin-Ashi also because, see, except only Renko, all these indicators will behave differently. Heikin-Ashi, I've checked. Heikin-Ashi or candles, both are same. I think I use the candles there. I can change it to Heikin-Ashi, show it to you. Nothing will change in the indicators. Provided you put on the option. That also I will show it to you. Just remind me, I will show it to you. Can you explain the entry, exit again? Are we going to discuss about traditional level? Explain the entry and exit level. You have to have Shivratri today. You are going to finish. I don't think others are ready. Are we going to discuss about traditional? What is the meaning of traditional levels?
No, you already answered that, sir.
No much idea.
Yeah.
Stayed about trade focus during the trade. Okay, I've answered. So there are two questions. Let me answer it before I say good night. One is that how to draw the chart, and the second is that this thing. Okay, let me take the. This is the chart you are asking, correct? Right, Sini?
Yes, sir. Yes.
Okay, I'll show you. Go to, very simple here. You see here. Go to settings. Okay, first you do this. Go to normal Bollinger bands. Okay, this one, right? Hello, Sini, say yes or no, something.
Yes, sir.
Have you gone to sleep already?
No.
You're not
No,
sleeping.
sir.
You're awake. Okay.
Yeah.
Bollinger bands. Take this. Number 2, then you go to the settings. Take a screenshot.
Yeah.
30, 30, 30. 3 Bollinger bands, right?
Okay.
Here, standard deviation 1, 2, 3.
1, 2, 3. Okay.
Normally we use 20, remember?
Yes, 20.
Yeah.
Correct.
And I told you this standard deviation, everything can be changed. You remember the first one I changed, moving average, everything I can change.
Yes.
Depending on how I want the price range to be in that thing. So I've used this 30, 30, 30, 1, 2, 3. See, 30 with that KDJ worked fantastic. Believe me, on Friday, it was Thursday. That's why I moved from 2B to 3B now. For me, yeah, that's for me. Don't take it. These are all colors you can put. These colors work nicely. It is my colors, but if you want, you can take a screenshot. Right? Okay. So labels on price scale, I left it because there will be too much space, and that is there. Okay. So is it clear now?
Yes, sir. But when I tried, using that indicator, I only get one Bollinger band, sir. Unless you get 3 lengths and 3.
No. Nilesh showed it.
Okay,
No,
okay.
there is a presentation by Nilesh when he presented 3D. He did it and showed it to you.
Okay. Okay.
Oh,
Yeah.
okay, I understand.
We added 3
Yeah, I
Bollinger Bands.
understand, but okay, I'll show it to you.
Yeah.
Let's take this. If you have time, I don't mind. I'll show it to you. I think we have a problem I understood. I'm taking a blank chart. This one is disturbing. Okay, I take I should not take this chart. Okay, I can take a blank chart. Okay. Change it to Hikinashi or whatever it is, doesn't matter. If you use Hikinashi, make sure you do this one. This must be checked. Otherwise, it will give different. Don't forget, do this.
Okay.
If
Okay.
you do Hikinashi, very important. Otherwise, prices will be different and you will be confused. Okay, this is the chart. So I go, sorry, this is a column, sorry, I used, sorry. And I go to Bollinger Bands. Okay, don't go here. Okay, Bollinger. So I said this, right?
Yeah.
Pick that one. Very simple. Put that again
Mm.
3 times.
Yeah. 3 times. That I'm doing currently.
You know that, right?
Yeah. That.
What is the problem with that?
No, but in your earlier chart with only one indicator, you had 3 Bollinger Bands. So,
Oh, yeah, that is a special one.
okay.
It won't be available in the, I will show you something. It won't be available and I won't be able to share.
Okay, no problem, sir.
I'm restricted, not because I don't want to share. I'm restricted to share. Okay.
Okay.
So I have many, it's called invite only. You won't find it in trading view. Remember invite only scripts?
Yes, sir. Yes.
You
Yes.
see that in your trading view? No, right?
No, not in mine.
Okay. That the solution to that is that GitHub, remember the GitHub I posted?
Yeah.
So what we do, I didn't talk to Ganesh. He sent me, so you go there, copy the script. Okay, there is one for this. Then you make that script and you can make it your own invite only script. Okay, which you can share with me or anybody whom you like.
Okay, sir.
Because you are the creator.
Right. Got it.
But if you're not the creator, suppose I'm the creator, I can share with you, I can give you permission to A, B, C, D. I can put your mail address in TradingView, or sorry, your user ID in TradingView, and I can give that to 20 people if I'm the creator of the script. You understand?
Right. Got it.
And if it's an open source script. So people who are familiar with the IT software industry, go to GitHub, you can get this, and you can accumulate over a period, or we can share, that's why adjective. We can share this invite only scripts among ourselves, and you will get the exact thing. Okay, clear?
Okay, got it.
Yeah, so that's it. So what was there was no other question, right?
Yeah, that is
There was
that
another
indicates
question. There was a Ekinashi, right?
Yeah.
So I showed this. Which one was this? No, I did one. Is it this
Yeah,
one?
this one only, sir. You need to change it to candles. Yeah.
Yeah. So, one person is joining Shrenik now. I will admit him. You can see here my good night. Okay. So, yeah, it doesn't make any difference as long as it's the same. So long as you do this. Yeah.
Okay. Yeah.
And this also. Okay. So, but in Renko, no. When you put Renko, these indicators won't work. It works. Whole chart is different. Everything is changed. But we use it also for our Renko strategy. Okay. So good night, gentlemen, ladies, and hope any questions before I close? Was it useful?
Yes, sir.
Yes, sir. It was useful. Very useful.
Very useful. So I hope you go through this even once more. Definitely, this is focused on your trade execution. You will find a difference if you take this seriously. And what else? That's it. So I'm going to close the presentation. Good night, friends, and have a nice weekend. Bye.
Thank you.
Thank you, sir. Thank you for your time.
Thank you, sir.
Good night.
Good night. Good night.
Thank you, sir. Good night.
Thank
Very
you, sir.
good.
Have a good day.
Thank you,
Good night.
sir. Have a nice weekend. Thank you.
Thank you. Good night. Bye-bye.
Bye.